Welcome back to Boni's Life, the only place where we decode the chaos of the crypto markets so you don't have to. I'm Boni, and if you've been watching the charts this past week, you know we are standing on the edge of a very steep cliff, or a very tall launchpad, depending on who you ask. We've got a massive week ahead of us from March 23rd to the 29th, 2026. We are talking about the Federal Reserve playing games with our portfolios, a historic milestone for Bitcoin, and a regulatory showdown in Washington that could literally reprice the entire altcoin market. So grab your coffee, maybe something stronger if you're heavily leveraged, and let's dive into the madness. Let's start by looking in the rearview mirror. The past week was nothing short of a roller coaster. Bitcoin opened the week around $65,970, rallied hard to briefly touch $76,000, and then the Federal Reserve decided to crash the party. Following the FOMC meeting on Wednesday, where Chair Jerome Powell delivered a hawkish hold on interest rates, Bitcoin took a 5% dive, testing the critical $70,000 support level. As of right now, Bitcoin is trading around $68,879, down about 3.6% over the last 7 days. Ethereum, on the other hand, showed some serious resilience, trading around $2,088. It actually outperformed the broader market earlier in the week, largely fueled by the buzz around BlackRock's new iShares staked Ethereum Trust ETF. From a technical perspective, Bitcoin is currently in a fascinating spot. We are trading just below the 50-day simple moving average of $69,375, but we are still comfortably above the 200-week moving average of $63,000, which held strong as support back in early February. The daily RSI is sitting around 45, which screams indecision. The market is literally holding its breath. We have immediate support at $68,500, but if that breaks, we could easily slide down to the $66,000 to $67,000 range. On the upside, $71,000 is the first major hurdle, with $74,000 acting as the heavy resistance we need to clear to get back to those recent highs. But here is where it gets interesting. If we look at the on-chain data from sentiment, there is a massive divergence between retail traders and the whales, small retail wallets holding less than 0.01 Bitcoin have been aggressively buying for 9 straight months. Historically, that is a contrarian bearish signal. Meanwhile, the whales, the wallets holding between 10 and 10,000 Bitcoin, are just sitting on their hands, waiting for clarity. However, the mega whales, those holding over 100 Bitcoin, have actually grown by 753 wallets in the last 3 months. The smart money is quietly accumulating while everyone else is panicking over the headlines. And let's not forget Michael Saylor's MicroStrategy, which just scooped up another 22,337 Bitcoin for $1.57 billion. As Saylor himself said this week, Bitcoin purchases don't lead to immediate price increases. There is always a delay. Now, let's talk about the week ahead, because the calendar is absolutely stacked. The main event, the one that is going to dictate the direction of the entire financial market, happens on Friday, March 28th. The U.S. Bureau of Economic Analysis is releasing the Personal Consumption Expenditures Price Index, or PCE. This is the Federal Reserve's preferred measure of inflation. At the FOMC meeting last week, the Fed actually raised its 2026 PCE inflation forecast from 2.4% to 2.7%, citing the surge in energy prices with Brent crude oil trading near $116 a barrel. If Friday's PCE data comes in hotter than expected, it confirms the Fed's hawkish stance, and we could see a significant sell-off in risk assets, including crypto. If it cools down, we might just see the relief rally we've been waiting for. Before we get to Friday, we have a gauntlet of Fed speakers to navigate. On Thursday, March 26th, we'll hear from Fed Vice Chair Philip Jefferson and Governors Lisa Cook and Stephen Miran. Given the recent geopolitical tensions and the energy shock, you can bet the market will be hanging on their every word. Any hint that the higher-for-longer interest rate regime is here to stay will put immediate downward pressure on Bitcoin and the broader crypto market. As Nick Tsay from Crypto.com pointed out, the March FOMC meeting effectively replaced the rate cut narrative with one of measured caution. For Bitcoin to reclaim its momentum, we need to see a stabilization in energy prices and a cooling of the US dollar index, which just reclaimed the 100 mark. On the regulatory front, all eyes are on Washington and the Clarity Act. This bill, which aims to resolve the regulatory friction between the SEC and the CFTC, has already passed the House and is currently stalled in the Senate over stablecoin yield provisions. However, reports suggest a Senate markup is closing in. This is a binary event for the market. If the Clarity Act advances, it provides the regulatory certainty the industry has been begging for, and we could see a massive repricing of altcoins. If it gets delayed again, the uncertainty continues, and the bear market for altcoins could extend. This comes right on the heels of the historic Memorandum of Understanding signed between the SEC and the CFTC last week, signaling a shift toward joint oversight. We also have some major industry events happening this week. Polish Blockchain Week kicks off on March 23rd in Warsaw, bringing together builders focused on DeFi, AI, and real-world assets. Over in Moscow, the 8th Crypto Summit takes place on March 25th and 26th. And looking slightly ahead, the Ethereum Community Conference ETHCC begins in France on March 30th. These conferences often serve as launchpads for major protocol upgrades and partnerships, so keep an eye out for announcements that could act as localized catalysts for specific tokens. So, how do we trade this environment? What are the strategies for the week of March 23rd? First and foremost, do not trade the headlines. As the analysts at Sentiment noted, during periods of high noise, whether it's war, legislation, or Fed rates, trading based on breaking news is incredibly dangerous. The market is currently deciding its next direction, and patience is your best asset right now. If you are trading Bitcoin, watch the $68,500 support level closely. If we break below that with volume, the next logical entry point for a long position is in the $66,000 to $67,000 range. If you are looking for a breakout trade, wait for a confirmed daily close above $71,000 before committing capital. For Ethereum, the $2,000 level is your line in the sand. The institutional interest in the new BlackRock staked Ethereum ETF provides a solid fundamental floor, but ETH is still highly correlated to Bitcoin's macro movements. The most critical strategy for this week is positioning around Friday's PCE data. If you are risk-averse, you might want to reduce your leverage or move to stablecoins ahead of the print. If you are a long-term investor, take comfort in the fact that the 365-day MVRV ratio is currently sitting at negative 26%. Historically, buying when the average long-term holder is underwater has yielded positive returns over a 6 to 12-month horizon. We are in a historically low-risk accumulation zone, even if the short-term price action feels like a blender. To wrap this up, the crypto market is currently caught in a tug-of-war between strong long-term fundamentals, like the 20 millionth Bitcoin being mined and massive institutional ETF volume, and short-term macroeconomic headwinds driven by inflation and geopolitical conflict. The smart money is accumulating, the retail money is anxious, and the Federal Reserve is holding the leash. Stay disciplined, watch those key support levels, and don't let the short-term noise shake you out of your long-term positions. That is all for this week's market breakdown. If you found this analysis helpful, make sure to hit that like button, subscribe to the channel, and drop a comment below with your price prediction for Bitcoin by the end of the week. I'm Boni, and I'll see you in the next episode of Boni's Life. Stay safe out there in the markets.